Welcome to Uncovering Trusts, a podcast by the Edison Group, a content-led IR business integrating analyst content, digital targeting, and investor engagement. Tune in to find interesting investment ideas and to stay on top of what's happening in the investment company sector. I'm your host, Will Manuel, and today I'm joined by Milosz Papst, Director of Investment Company Content at the Edison Group, who will talk about the Aberdeen Asian Income Fund. Ticker is AAIF. Milosz, thanks for joining us today.
Hi, Will. Good to be here.
Great. So let's start by setting the scene. Why should an investor consider Asia for income?
Yes, I think the key point to make is that some people may not appreciate that more than half of Asian listed companies are generating a dividend yield which is higher than 2.5%, and the dividends make up more than 50% of Asia-Pacific total returns. Asian dividend growth should be sustainable given companies in the region have relatively low net debt to equity ratios and generate robust cash flows.
Okay, thanks. That makes sense. So moving on to the Aberdeen Asian Income Fund, regular listeners will remember that our last podcast about this company was broadcast in June 2024. However, for anyone less familiar with the fund, can we have a brief introduction?
Yes, sure. I'm happy to provide our listeners with some background. Later this year, the fund will be celebrating its 20th birthday, having launched in December 2005. It is managed by Aberdeen's Asian equity team, which is based in Singapore and aims to generate an attractive total return from a diversified portfolio of Asia-Pacific equities, including those with above-average dividend yields. Its portfolio contains investments across the market cap spectrum, and there are no constraints in terms of geographic and sector exposures.
Right, thank you. So I understand that earlier this year there was an interesting announcement from the board. Can you provide the details, please?
Yes, you're right. Back in mid-January, the company's board announced some additional features which should further increase the appeal of this fund for investors seeking a high-quality, attractively valued Asian equity exposure. Firstly, an enhanced dividend policy. The company's investment objective emphasizes the importance of income and income growth as well as capital growth in delivering an attractive total return. So in recognition of investors' appetite for yield, the company's dividend will be set at 1.5625% of its quarter-end NAV, so 6.25% of NAV per year. Now, based on the end of December 2024 NAV per share and the current share price, the notional annual dividend yield would be around 7%, so a quite attractive level.
Yeah, I'd agree with that. And so when will the first enhanced dividend actually be paid?
It will be based on the end March 2025 NAV and paid in May 2025. I would add that in periods when the company's revenue is less than the dividend, distributions can be made from a combination of revenue and capital reserves. It is important to note that there will be no change to the investment policy as such.
Right. And any other news about the company's dividends?
Yes, the board also announced the fourth interim dividend for FY24 at 6.78 pence per share. It is a very significant increase of nearly 60% year on year, bringing the total FY24 dividend to 14.43 pence per share, which is around 23% higher than the FY23 annual dividend payment. And by the way, this marks the 16th consecutive year of higher annual dividends, meaning that the company is an AIC Next Generation hero and well on its way towards a 20-year record required to be classed as an AIC dividend hero.
Okay, impressive. So why was there any other important information in the January press release?
Yes, so along with the dividend news, the company's board also announced the introduction of a 3-year continuation vote. This underscores the board's commitment to transparency and ensuring that shareholders have a direct say in the future of the company. The first vote will be held at the company's 2028 AGM and every 3 years thereafter. If shareholders vote against the company's continuation in its current form, the board will offer proposals for the future of the company.
Okay, so that's the recent developments taken care of. Should we remind listeners about the company's portfolio, maybe?
Of course. The company's managers follow Aberdeen's quality and value approach. They define quality businesses as those that are simple to understand, operating in a structural growth market, with a solid management team that focuses on having a strong balance sheet and generating robust level of cash flow and sustainable dividends. This, in turn, supports the fund's growing dividends. The portfolio typically has around 60 names, with the top 10 holdings making up around 40% of the fund. Befitting the multi-cap approach, around 20% of the portfolio is invested in smaller companies with market caps of up to £2 billion. The company's managers are supported by Aberdeen's 40-strong group of local analysts who can help to identify attractive opportunities that may be overlooked by other investors.
Okay, thanks. And how's the fund currently positioned?
Overall, the portfolio holds some of the most successful Asian companies, as well as younger firms with promising futures. China and India can generally be considered growth markets, so do not prioritize returns to shareholders. Hence, the company has a below-index exposure to these countries. That said, I would note that Chinese listed companies, both state-owned and private, have exhibited an increased focus on shareholder returns this year, with a prominent example being Tencent, which the Aberdeen Asian Income Fund added to its portfolio. The fund is overweight Singapore, which is the highest yielding country in the region, and whose companies have grown out of their domestic market and are expanding overseas. Asia is home to some global dominant IT hardware names, such as TSMC, which is by far the largest holding in the portfolio. And IT is the largest index exposure, and the companies overweight this sector. It also has a high weighting to financials, which is quite common for an income fund.
Okay, so can you update us now about some of the long-term structural growth trends that are represented in the portfolio?
Sure, I would pick out three, and maybe let's start with aspiration, which stands for the growing percentage of the Asian population that has more disposable income, which is driving demand for higher quality goods and services. The fund's portfolio companies exposed to the theme include the life insurance-based financial services company AIA and the home appliance business Midea Group. The second theme is digital future, with examples of portfolio companies including Sunwealth Electric Machine Industry, which is active in precision motors and thermal solutions, and Samsung Electronics. Finally, the technology enablers in the company's portfolio include the semiconductors business TSMC and the network communication equipment company Acton Technology.
Right, thank you. And can you give us a sense of how the company has performed?
Absolutely. The fund's performance outpaced the performance of the MSCI AC Asia Pacific Index over the last 3 and 5 years. Here I would note that Aberdeen Asian Income Fund has a low beta portfolio, meaning it should perform relatively well in choppy markets, but is unlikely to keep up in strongly rising markets. It is also worth noting that the fund has the second highest yield within the 5 strong AAC Asia Pacific equity income sector.
Okay, so Milosz, thanks. That was an interesting update on the Aberdeen Asian Income Fund. Any last comments? Anything you'd like to add?
Yes, I would maybe add that this fund could be considered as a high-quality core name for investment in Asia, which is a region with above-average growth prospects. As over the next 20 years, Asia is expected to be the largest contributor to global growth. So, along with the dividend discussion earlier, Asia offers good prospects for both capital and income growth, and therefore could well appeal to a broad range of global investors.
I'm sure that's right. So, thanks once again, Milosz. Looking forward to our next discussion in a couple of weeks. You've been listening to Uncovering Trusts, a podcast by the Edison Group. If you want to find out more about Aberdeen Asian Income Fund and other investment companies that we cover, please visit www.edisongroup.com.